Coming into 2018, everybody talked about this global synchronized growth, and it didn't really happen this year, but I think it will happen next year, just not in a good way. So I think we'll have a global synchronized slowdown next year, and we should expect that. In the absence of any kind of fiscal or monetary stimulus, most economies should decelerate towards their potential GDP growth rate, and we've been well above potential for a couple of years now, certainly for this year. So we should expect a slowdown globally.
I think one thing, Megan, people forgot was that a lot of the 2017 and a bit of the 2018 growth came from the idea that global economies were doing better than we thought.
Yes.
That was a surprise. And the thing Megan said, the synchronized global growth, that was like one of those Davos buzz phrases.
That was like all the rage in December, January.
December,
and then
January,
in February it was like out the window.
They were dancing around the snow in Davos on synchronized global growth, you know, and then they got home when it was synchronized, and as the year has gone by. So, Megan, I may be wrong about this, but some of the estimates I've seen say it added about a half a point to the U.S. So maybe that comes off, and maybe that's just one of the reasons why people are in that 2.5 camp.
Yeah, I think a piece of it is the fiscal stimulus measures, too, which hit the U.S. economy the most in the first 3 quarters of this year, but by the second half of next year will mostly have dwindled, and certainly will finish by the end of next year. So the question going into 2020 is whether we get a re-upping on fiscal stimulus measures, particularly going into an election year. But I think that's why economists seem to have found consensus on 2020 being the year we find a recession. I'll just say when economists find that kind of consensus, you can almost be sure it won't happen that year.
That's exactly right. So we know now, Steve, people are talking about the slowdown. Give us some examples historically of when we've seen, so Europe, again, the data bad, French data in contraction overnight, but the German stock markets have also been terrible this year. The European markets have been terrible this year. How much worse do they think it's going to get? If Europe goes into a recession, how much bearing does that have on us?
It has some bearing, but I think people are a little bit kind of pessimistic and thinking America being more the so-called price taker rather than the price maker. How well America does is as equally important to the rest of the world as how the world does.
Maybe more important.
If we do well, others will do well. I think there's a little bit more concern about China. And the reason is because China is something like 25 to 30% of global growth. Not global GDP, right? They're about 15% of global GDP, but they make up a disproportionate amount of the growth. And by the way, that's one of the things that has restrained prior administrations from pushing too hard on China. You don't really want to cause a China slowdown because that's going to come back and slap you in the face.
That's right. So, Megan, how much do you think China's going to slow next year? And, you know, this is a little bit different. Look, we know the data was bad even before the trade war got more severe. So now it's up to the Chinese to decide which is the more important thing, supporting their economy or winning some concessions from the U.S.
Yeah, that's right. So I'm not actually overly worried about a slowdown in China. As you mentioned, it started before the tariffs kicked in, and the tariffs will certainly bite in terms of the Chinese economy. But the benefit of having a centrally planned economy is that the Chinese government has a ton of tools to use to prop the economy up. So they've already provided a bunch of monetary stimulus, some fiscal stimulus, mainly at the local and regional level. And then unofficially, the government can lean on banks and SOEs to lend into the real economy, which is a form of stimulus as well. So in the short term, I'm relatively sanguine on China, though to be sure trade will bite. I would point out that China has a much longer time frame than the U.S. does typically. And so I don't think that China's wondering whether next year it needs to worry about some kind of détente or boosting its economy. I think it's playing a much longer game and thinking, you know, should we wait it out through 2020 and will this problem go away?
I think it's important for me to look into the camera and talk to viewers and say, the U.S. consumer has the power to save the world. If you go out and shop with someone.
But it's happened. And it's not saved the world. It's not saving retailers.
No, it's happened before. It's happened before. On the cusp of imminent slowdown, we have wondered, would the U.S. slow and the U.S. consumer. Now, I don't want you to go into big debt on this. Don't go into big debt. But if you can go out and you can look, that's why we had the 0.2% increase in the fourth quarter.